Hello everyone, welcome to Crack Grade B online learning platform. So today we are going to start with your subject, that is commerce and accounting. So before we start this subject, it is very important to know the very meaning of the term accounting and its terminology. That will explain you about what the subject is about and what are the terms that we are going to deal with in every chapter. So there will be some terms that will be used in almost every chapter and you should have the basic knowledge of them. So this is part 1 and again I will have part 2 of other terms that are important for your learning. So let us start with it. What is accounting? So first of all, we can just go through the definition. Maybe you won't be able to grab everything at once, but right now we can do a raw learning. Then we'll summarize it and we'll understand the terms that are used in accounting and its definition. And then we can come back to the definition and re-revise it. So that way you can better understand what is the meaning of accounting and why is it so important. Okay, so what is accounting? Accounting is the process that helps to record, summarize, analyze, and report the information that concerns financial transactions. Accounting is a definite process of interlinked activities that begins with the identification of transactions and ends with the preparation of financial statements. Let's understand the components a little better to understand the true meaning of accounting. Okay, so there are some terms that are used in the definition itself. That is, it is a process and which helps us to record, summarize, analyze, and report the information. Now, there is a very minor difference between information and data, which many students interchangeably use the words. Data is what? Now, if I read a newspaper, I come across so many data, like every article or everything I go through is data for me. Unless and until, for example, I am a stockbroker and I read the newspaper Economic Times and I have investment in, like I want to invest in some company and I get the information about that company. Now that data is now called an information for me because it is useful for me. It is the data for my field. So accounting is similar in a similar manner. Everything we get is data, but accounting it just extracts the data and turns it into information that is required by the managers and other people in the organization. Uh, Later on, we will also study about the users of accounting, but let us focus on the meaning of accounting. So, accounting is the process that helps to record, summarize, analyze, and report the information that concerns financial transactions. Okay, guys. So let us just recall this definition for some time and then we will come back to it and then I will explain you bit by bit every meaning of each word that has been used in the definition. Basic terms in accounting. Business entity. Okay, so whatever an organization is, like if today I want to do a business, I have to set up a name, a store, or maybe if I want to do business on a large scale of shoes or you could say mobile phones, I have to set up something that is known as business entity. Now in accounts, whatever we prepare is for like the accounts that we prepare. Accounts in Hindi is termed as खाता. तो जो भी हम अपने ऑर्गेनाइजेशन के लिए बनाते हैं कि हमारे ये एक्सपेंसेस हुए या हमारे ये प्रॉफिट हुआ, हमने इतने में बेचा था, हमने इतने में खरीदा, that is all for business entity. So the first and the most basic term for accounting is business entity. It means a specifically identifiable business enterprise like Super Bazaar, Reliance Industries Limited, ITC Limited, etc. An accounting system is always devised for a specific business entity, also called accounting entity. So very well said. A business entity will always be called an accounting entity. Why? See, Reliance Industries Limited and ITC Limited, there are very vast business organizations. We all know about them. So ये सारी एक identifiable business enterprises हैं. Identifiable. Why do we use this term? Because they are all different from the other. They have a specific name for themselves. Reliance Industries Limited, that is known as RIL, and ITC Limited, there are two different organizations and they are identifiable. So, and an accounting system is always prepared or devised for them to check the transactions that are taking place in that organization. So, that is the term for business entity. Let us cover the next term, transaction. Okay, so now in the meaning of business entity, I right now use the term transaction. Now, what does that mean from accounting point of view? So let us first go through the definition. An event, sorry guys, it is an event involving some value between two or more entities. It can be a purchase of goods, receipt of money, payment to a creditor, incurring expenses, etc. It can be a cash transaction or a credit transaction. Okay, so let us imagine things now. I have set up an organization, or you could say, I am a homemaker and I want to start my own store for, say, a boutique. So, first of all, I will go to a wholesale market and purchase some suits that I have to keep in my boutique. So, the first transaction that I did was to purchase suits for my organization. I paid money for them. So, the buying or the purchasing of the suits is a transaction in itself. And paying money to the vendor from whom I have purchased those suits is a transaction in itself. So, purchase of goods here or receipt of money. Now, for example, I sold one of the goods or one of the products that I bought for my boutique for selling purpose, of course. So, I came across one customer and he bought one suit from me and I received money for it. So, the receipt of money is again a transaction. Payment to a creditor. Creditor. Now, who is a creditor? It is a vendor only. Sometimes, for example, I bought 10 suits from one person, from a vendor or a creditor. Now I had paid him for 9 suits, but for one suit, I told him the next time I come to your market, I will pay them or I will pay it later on with other suits that I will purchase in the future. So that one thing, 9 suits I paid for, and once for the payment of one suit is still pending. So sometimes I can also purchase the suits on credit and also on cash. Like if I pay the whole of money for which my bill was made, that is called a cash transaction. And if I purchase anything and don't pay timely, for example, I pay on a future date on an agreement between my vendor and me, then it will be called a credit transaction. So this is what transaction is. Capital. Okay, capital is a very important term. What it means: amount invested by the owner in the firm is known as capital. The amount invested by the owner. So now, what I did was I opened one store as boutique where I will keep all the suits. So now what I had to do is I had to invest a lot of money for the decoration of my boutique, for maybe purchasing the boutique, renting out the premises. For the renting of premises, I had to pay the rent as well. So whatever investment I am making, that is my capital. Whatever money I'm keeping in my business or investing in my business, I am the owner and I am investing in my firm for it to grow and give me profits in return. That is known as capital. It may be brought in the form of cash or assets by the owner for the business entity. Now, if I purchase many suits and keep them in stock, it is like the capital that I'm bringing in is called bringing in the capital through assets. Or maybe there is some business requirement where I have to keep in cash. For example, I want to do a business of lending money to people. So I have kept a lot of cash at a place where people can come in, pay me interest, and take the money, borrow from me. So that cash, if I'm keeping with myself, is also known as the capital for my firm, right? Next line. Capital is an obligation and a claim on the assets of business. Now, a business entity in the eyes of law is a separate person from the owner. We cannot say that an owner and the business entity that he has created are same person. No, they are different. So when we make the financial statements of the business that we will study later on, so that is the balance sheet and the profit and loss account. So in the balance sheet, we maintain the assets and the liabilities of the business entity, and at that time whatever capital there is for the, like, it is like if I have spent money on my brother, he has an obligation to pay it back to me at some future date. It is an obligation for him, and I have lent him money. Same way, since business is a separate person in the eyes of law, it my capital that I have invested in my business, it is an obligation for my business to give it back to me, give something back to me. It is like the business has borrowed some money from me, so it is an obligation, and it is therefore shown in the liability side of the balance sheet. This we will later study about, but for the time being, this much knowledge is enough for you guys, because right now we are learning the basics. Next thing, it is therefore shown as capital on the liability side of the balance sheet, as I just told you. Okay, next, revenue. Okay, revenue. So these are the amounts of the business earned by selling its products or providing services to customers, called sales revenue. Other items of revenue common to many business are commission, interest, dividends, royalties, rents received, etc. Revenue is also called income. So there is a very minute difference between the two terms, that is revenue and profit, which students interchangeably used, but it is very important to know the very basic difference between the two of them. As I gave you the example of the boutique, as well as if I have a business of lending money to people, in both the cases, I will tell you what the revenue is. Firstly, um, if I have bought, for example, say 4 suits at a price of 400, and then I have sold it to a customer or customers for 800. So, 800, that is what I have got from the customer for selling my product. That is called my sales revenue. That full amount of 800, though it covers my cost, but it is known as the revenue, the exact receipt of money that the customer has given to me. Other items of revenue common to many business are commission, interest, dividends, royalties, rent received. So if I have, say, 4 plots, and I have rent it out to someone, and he is providing me rent every month, monthly he gives me rent, so that rent income also that I receive is my receipt if I have a business of doing that. So revenue is also called income. Now the next term that we will study will be profit only. Let us move on to that slide. Mm, where is profit? Okay, here, profit. So in my example of boutique, that included, that 800 rupees included my cost as well. But if I, from my revenue, if I subtract my cost, then it gives me my profit, the net profit that I have earned in that transaction. Now buying of suits was one transaction, selling of suits was another transaction, and the difference between my cost and my revenue is my profit. It can sometimes be loss as well, but the basic objective of business is to earn profits. We'll study about loss as well, but right now, the excess of revenues over of a period over its related expenses, including during an accounting year, is profit. Profit increases the investment of owners. Okay, so the excess of revenues over its expense or over its cost in any accounting year, this is for like whole business, but what I have told you is for a particular transaction, that is known as a profit. And whatever profit I may earn, for example, in that case I earned 400 rupees, and in many transactions, say I earn 400, 400, 400, like that way I earn 400 or rupees 100 per suit, and I reinvest that in my business. So that is actually increasing my investment. So it is well said that profit increases the investment of the owners. Next, balance sheet. So accounting is all about the preparation of balance sheet and profit and loss account, which give the true and fair view of where the business stands, about its net worth, about its assets, liabilities, what are the expenses that it has incurred, and what are the revenue, what is the revenue that it has earned during that period, and where it actually stands. So balance sheet, we will study about the preparation at a very later stage, but right now we are just understanding the basic meaning of balance sheet. A balance sheet is also called a statement of financial position. Why it is called a statement of financial position? Now here I have provided you with a sample format or a draft of balance sheet. It has two sides. One is the liability side is called debit, and the asset side is called credit. Now the assets, whatever assets the organization has, we will study about assets and liabilities as well. But right now the basic meaning of assets is the goods that we have, or the land and building, or whatever things of value we have. Assets means item of value. So whatever things we have in our hand which help us increase the efficiency in our business, or which help us do the business, they are known as assets, and they are shown in the credit side of the balance sheet. And liabilities, these are the obligations of the owner or the business, you can say. Capital, as I told you, business and the person doing business, they are two separate persons in the eyes of law, and the balance sheet is created uh, for the business, so for the business entity. So if we are maintaining an account of what the obligations and assets are of the business, then we will say the liability arises towards the owner as well. So therefore the capital has been shown on the liability side of the balance sheet. Then we have reserves and surplus, sorry, outstanding expenses, loans, trade creditors, bills payable. And on the asset side, we have many assets or the items of value, including cash. So this is it. Let us go through the definition of balance sheet. A balance sheet is also called a statement of financial position. Financial position, why? Because finance means cash position, you could say, or what our net worth is, because it provides a snapshot of your assets and liabilities, and therefore net worth at a single point of time. Whenever we look at the balance sheet of the company, it gives us a true and fair view of the position of the company at that point of time. All right. So here it is. The If I look at the balance sheet as on say 31st March 2019, so at that point of time, whatever the assets are and the liabilities standing in the account of the company, that will show me the true and fair view whether the company is in profits or it is making losses. So these are the terms over here. Next, before preparing the balance sheet, we prepare profit and loss statement or the profit and loss account. First, let us talk about the draft of income statement that I have provided you with. Okay, so before this, also we maintain a trading account in which we refer to the gross profit that we have earned. Gross profit is the whatever sales we have made and whatever closing stock we have, minus our direct expenses, the cost of goods sold, and the opening stock. These are not important terms right now. We can just have a look on the profit and loss statement. The profit and loss statement summarizes the revenues and expenses generated by the company over the entire reporting period. So here, on the debit side, we debit all the expenses, and on the credit side, we have all the revenue earned, like the rent received if we have any business of letting out of the properties, then the discount received, maybe we have purchased few suits from a customer, from a lender, and he has given us some credit, or you could say some discount on it. So we mention it on the credit side of our P&L. Interest earned, bad debts recovered, commission earned, dividends received, income from other sources. And here we have salaries, rent, traveling expenses, stationery and printing. So whatever expenses that a person or the entity has incurred to earn the profits or to recover receipts, they are mentioned here on the debit side. And at last, the revenues minus the expenses. If we have a positive thing, it will be shown here. That is, the net profit will be debited and will be transferred to the capital account. And if we have incurred loss, what it means that the debit side is greater than the credit side. It means that our cost or the expenses, they are increasing, or they are more than our revenues earned for the period. At that time we incur loss. It is also transferred to the capital account. It will be subtracted from our capital account, and profit will be added to our capital account, because it is always said that the owner tends to reinvest the profit in the business. Next, assets. Assets are item of value used by the business in its operations. For example, Super Bazaar owns a fleet of trucks which it uses for delivering foodstuff. The truck thus provides economic benefit to the enterprise. Assets can be broadly classified into two types. Now, two main things: item of value, anything that is items of value, and provides economic benefit to the enterprise, they are termed as assets. Now, here only I have provided you with one example, that is Super Bazaar. Maybe it is a store and it has a lot of trucks, a fleet of trucks, and which are used for delivering the food stuff to the customers. Now, that truck, it is not for the selling purpose. Super Bazaar, the work of it is to deliver the food stuff to the customers and not deliver the trucks. So, but to reach the customers, trucks are being used by the Super Bazaar. So it is an asset for the company. Why? Because it is uh, helping to deliver or provide economic benefit to the enterprise, and also being used for operations of the business. Now, assets can be categorized into two types. First, there is current asset, and then there is non-current assets. So current asset, as you can see in the picture, cash and cash equivalents. And here you can say a building. So what does it mean? We all know that anything that will deliver us value is known as an asset. Now, current assets are those assets of the company that are expected to be converted to cash, sold, or consumed during the normal operating cycle of the business, usually 1 year. Examples are cash, short-term investments, and prepaid expenses. All right. And non-current assets are long-term assets that a company expects to hold over 1 year and cannot readily be converted into cash. For example, the long-term investments, intangible fixed assets, and tangible fixed assets, and goodwill. Now, the current assets, any asset that can be converted readily into cash, or within one operating cycle of the business, that is 1 year only. If it can be converted, any asset that can be converted within an year in cash is known as a current asset. That means at present we can get it. Currently we can get that asset. We can convert it into money, so it is a current asset. Here the example is cash itself. Cash is always in money form, so it is a current asset. And short-term investments. What are short-term investment? Anything uh, we have made an investment, but we can go to the bank and convert it into money. We can just drop that investment, or we can get it into money. We have gold, and it is also an investment, and we sell it and we get money for it. These are all examples of current assets. Also, prepaid expenses, though it is not in a cash form, but if we have paid to our lender or a provider beforehand, in advance, if we have paid money to our lender, it is also termed as current assets, because in the future we don't have to pay cash for it. It is like saving money in the future. Therefore, we consider it as current assets. Non-current assets, on the other hand, it means that any asset that cannot be converted within 1 year into cash is known as non-current assets. So long-term investments like FDs we have, the maturing period is usually 5 years. So it will take 5 years for it to mature, and then only we can get cash for it. So it is a non-current assets. Then tangible fixed asset, uh, building. Building cannot be in an year. It can, no, it is like it can be sold in 1 year, but it is always termed as non-current assets. The tangible fixed assets, they are always tangible fixed assets, means something which we can touch and are delivering value to us. For example, the truck in the above example, or a building over here, or patents or goodwill that we cannot touch, but they are there. So these are all ever termed as non-current assets. Liabilities. Liabilities are again of two types: current liabilities and long-term liabilities. Okay, what are liabilities? The most important term for it is obligation that an enterprise has to pay at some time in the future. So both small and big business find it necessary to borrow money at one time or the other and to purchase goods on credit. RIL, or I have used the abbreviation for Reliance Industries Limited over here, it has purchased 10,000 goods on credit for a month from fast food products. So what happens here is we are not paying our lender immediate cash. We say that we will provide you with cash, but on a later date or on a future date. So till we provide him with the money, it is known as a a credit purchase, or we have a we have an obligation to pay him at a future date. So this is a liability that is outstanding on the entity's part, that on some date we have to pay him money. So if we make a balance sheet out of that, on say on March 25, 2005, we took on credit goods worth 10,000, and then on 31st March 2005 we have to prepare a balance sheet of it. Then in the balance sheet that we prepare, we saw that the debit side is of liabilities. The fast food products will be shown as creditor on the left side of the balance sheet. And again, there are two types of liabilities: current and non-current. So liabilities to be paid within 1 year of the balance sheet date, that is, if we have purchased some goods on credit and if they are repayable during 1 year itself, then we can say that they are current liabilities. And if we have to pay interest to bank, or because there is bank overdraft, we have to just rectify that limit that has been provided by the bank. Or we have customer advances. See, we had current assets. In current assets, we had prepaid expenses, and here we have customer advances. If a customer is paying prepaid to us for any of the goods to be delivered, then also we have a liability to deliver goods to him. There is some kind of tension that we have already got the money, and but we have to provide a service or provide a goods for it. So it is also known as current liability, because if he's providing us with money, obviously within some time we have to provide him with the service or the goods. So it is a current liability. On the other hand, if I talk about the long-term liabilities, these are liabilities in your business that are due in more than 1 year. For example, the long-term loans. For example, a company has taken a loan from a bank for 5 years or 7 years or whatever the term may be. It is more than 1 year, and therefore it is known as long-term liabilities. Expenses. We have already talked about the profit and loss account, and we mentioned there all the expenses are debited to the debit side of the balance sheet, or the left side, debit side of the profit and loss account, or the left side. So the costs that are incurred by business in process of earning revenue are known as expenses. How? So I had to open one boutique, and for that I had to go to wholesale market to purchase the products. So I had to travel from my place to say Lajpat Nagar or any other market to buy the goods or the suits. My traveling expenses on the way, they are known as the cost incurred by the business for earning revenue. I went there so that I could resell my product and earn revenue from it. But the costs that are incurred, that is my traveling expenses, or whatever I had to incur. The stickers, maybe I had to Maybe I had to purchase stickers so that I can provide the customers with rates on them, the prices of the products. So everything that I incur to earn revenue is known as my expense. The usual item of expense are rent, wages, salaries, interest, cost of heater, light and water, telephone, etc. And also if I had to open a boutique, but I didn't have enough space for it, so I took a store on rent and I have to pay rent for it every month. That is also my expense or cost incurred by me for earning the revenue. Next, accounting of financial year. A financial year is any annual period at the end of which a firm's accounts are closed. It starts from 1st April of the year and ends on 31st March of the next year. So one there is calendar year and the other it is accounting of financial year. Calendar year, it starts from 1st of Jan and ends on 31st of December. But here the accounting of financial year, that is the business year, it is an annual period. It means it has 12 months only, but it starts from the 1st April of the year and ends on 31st March of the next year. Okay. Profit, we have already discussed it. Gain. Now, profit is something usual for the business. For every usual transaction that takes place in the firm or the entity, we term it as profit. That it was a usual transaction for me. I was opening a boutique and I was selling goods that were suits and I was earning profit. But gain. Now, for gain, if I have to talk about, I had mm, since I have a boutique, so I will have a mannequin as well. That is a dummy or say anything which I consider my fixed asset. Why? Because so then customers can come and they can look at the mannequin and see how the product will look on them. So, for example, I sell off one mannequin. That is my fixed asset. This is not incidental to my business. This is incidental to my business, but not a regular activity that I follow. That every day I do not sell my mannequin. Why? Because my regular business is of buying and selling the suits, but selling of a mannequin is a not a regular activity. So if I sell it on profit, I bought it for 1,000 rupees, but I incidentally sell it for 1,200 rupees to a friend or anyone who asked for it. Then it is a gain for 200 rupees. It was incidental to my business, but not a regular event. Or where I was where I opened my store, it was not a commercial area, and a person claims and takes me to the court, files a suit against me that no, you cannot open a store over here, and I won the case. In that case also, winning a court case is again a gain for me. Next, loss. The excess of expense of a period over its related revenues is termed as a loss. It decreases the owner's equity. It also refers to money or money's worth lost without receiving any benefit in return. Example, cash or goods lost by theft or a fire accident, etc. It also includes loss on sale of fixed assets. So this definition is self-explanatory, but let us consider the example part of it. That is goods lost by theft. I left my store open, or the staff that I have kept for entertaining my customers. She took one of the suits at her home, and the next day I couldn't find it. That is goods lost by theft. I cannot blame her, or we are not going into that part, but it is actually a loss for me. I bought it for 400, but now I cannot recover it from my customer. I can even not earn profits on it. So that thing is a loss for me. That is goods lost by theft. Or even if I had kept cash in my drawer and next day I cannot find it, someone took it or it was stolen by someone, then also it is my loss. Discount. Discount is the deduction in the price of goods sold. Now again, if the vendor or the lender gives me discount on the goods that I purchase from him, then it is a discount for me. It is a reduction in the price of goods sold. Voucher. Now, whenever you go to a super bazaar or a supermarket and you buy groceries, you buy fruits and vegetables. So in the market you have that thing, they give you a bill that you have bought these products for this price and things like that, and then they give you the total amount that needs to be paid by you. So that is a voucher, that is a document, that is an evidence in support of a transaction. That means they have given you that, yes, you came to our store and purchased goods worth this amount from our store. So the documentary evidence in support of a transaction is known as voucher. For example, if we buy goods for cash, we get a cash memo. If we buy on credit, we get an invoice. When we make a payment, we get a receipt, and so on. So this is also self-explanatory and we already know this term. Goods. It refers to the products in which the business unit is dealing, that is, in terms of which it is buying and selling. In my case, if I open a boutique, then suits are goods for my store. The items that are purchased for use in the business are not called goods. For example, for a furniture dealer, purchase of chairs and table is termed as goods, while for other it is treated as an asset. Okay. Now, a furniture dealer, if he is purchasing chairs and tables, for that person, furniture or the chairs and the table will be termed as good because he will have the business of buying and selling them. But for me, if I buy furniture or chair for my boutique, it is not an asset. It is not a good for me. It is an asset. Why? Because it will provide, you could say, smooth functioning of my business. The customers will come, have a seat, and look at the things that I have to provide them. They can feast their eyes by looking at the products, but I don't have to carry on the business of buying and selling of furniture. So it will not be termed as a good, but an asset for my business. Stock. Stock inventory. Stock or inventory, you could say, is a measure of something on hand, goods, spares, and other items in a business. It is called stock in hand. So everything that I have in spare or other items in the business for the smooth functioning of my business is known as stock in hand. Drawings. Now, I had purchased 5 suits and a ceremony is going to happen at my place, say some inauguration, or I had to attend a marriage, and I like one of the suits that I had purchased for my customers for reselling purpose. So I took one of the suits and I kept it in my almirah. That is my drawing. That means I'm not going to resell it, or I'm not using it for the business purpose, but for my own purpose. Or I had kept 10,000 rupees in the drawer for my business purposes, but then I took them because I had urgent need apart from the business. So those things, the withdrawal of money or goods by the owner from the business for personal use, if I'm taking them for personal use instead of the business purpose, then it will be termed as drawing. Drawing reduces the investment of the owners. It is reducing the investment. But why? Because I had purchased or I had invested in the goods, the suits, for selling them and for earning profits. But now if I'm using it for my own purpose, for my personal purpose, then I cannot earn money on it and I'm withdrawing the amount that I had invested in the business. Purchases. Purchases, we all know, are total amount of goods procured by a business on credit and on cash for sale or use. So purchases are equal to goods purchased on credit as well as on cash. If I'm doing cash purchase or I'm doing credit purchase, the total of them will be the total purchases. Next, creditors. Creditors are persons or other entities who have to be paid by an enterprise an amount for providing the enterprise goods and services on credit. Okay, so the wholesalers or the dealers through whom I purchase the goods, they are my creditors. They have to be paid by the entity or the person the amount for providing the goods and services on credit. Next, debtors. Debtors, on the other hand, if I have to recover some amount from my customer, say she was a fast friend and I gave her goods on credit. She took the suits away. She told me that I will show it to my husband first and then I will tell you what the status is, if I'm buying them or not. So she paid me after 5 days of taking the suits away. So that is, she is my debtor. They are the person or are other entities who owe to an enterprise an amount for buying goods and services on credit. The total amount standing against such persons on the closing date is shown in the balance sheet as sundry debtors on the asset side. Now, these are some of the terms that we have discussed. I will again come with part 2 here, wherein I will explain the other terms that I feel are important for you to understand before we start with the other concepts of accounting. Right now we are going to discuss a very small topic, that is the users of accounting. So the accounting information generated by accounting process is communicated in the form of reports, statements, graphs, charts to the users who need it in different situations. Users of accounting information. Now, whatever information we are creating, whatever record of the transactions we are maintaining for our entity, for whom are we doing that? For the owners, of course, so they can track whatever transactions on day-to-day basis they are covering, like how many suits they have sold per day, or what is the revenue that they have earned for the whole day, the cash they have kept in the drawers, is it fine? Like if in the morning they have kept 10,000 and now the total sales according to them is 8,000 for the day, sales revenue is 8,000 for the day, so at the end of the day in the drawer there should be 18,000. So if we keep a track of all the transactions on a paper, then it will be easier for us to know the exact position of the firm. So accounting information is important for the owners, and in the big firms for the managers and the employees as well. For their day-to-day working, they should also have a record of what they have done. This is for the internal users, and if we talk about the external users, the investors in the Reliance Industries Limited, there are a lot of investors who rely on the balance sheet and the profit and loss account of the company. It is basically made by the auditors of the company or whomsoever, but it is serving a purpose for the external users as well. The lenders, the suppliers, the customers, tax authorities, government, auditors, and the public as well. So thank you guys. That's it for today, and I will come up with another part in which we will discuss all the pending terminologies. And here, so these are the courses. Wait. These are the courses that have been provided by crackrateb.com, and these are some of the star performers of RBI Grade B, SEBIGRADE B, IRDA, and NABARD. You can have a glance at these sites, and thank you. Happy learning.